speaking. Welcome to the fun side. And with us, we have one of our first guests. We have Kyle from Nina Capital. Kyle, thank you for joining us in our studio.
Happy to be here.
Yeah, we're not big yet, so we're still waiting for that big sponsorship so we can fly you on to what hopefully will be an actual studio. But as you can see right now, I'm in my penthouse in New York. Kyle's from the US, but he's working for a VC based out of Barcelona. Kyle and I met when we had a last minute need to fill out a panel at our private equity and venture capital conference, which happens on an annual basis. So I shamelessly looked in LinkedIn, came across Kyle and sent him a message. But to his credit, Kyle was gracious enough to not laugh in my face and just ignore me. He actually ended up coming to our conference and moderating an amazing panel. So Kyle, firstly, thank you for that. And secondly, welcome to the fun side.
Yeah, thanks for all the organization, both on the conference as well as, this is a great venture that you're working on here. So happy to be here. Happy to talk about anything and everything VC.
Amazing. So Kyle's been in Europe for the last 2 years now. He post B school started corporate venturing at Novo Nordisk, but now he's at Nina Capital, a fund focused on health tech. And before we jump into that, Kyle, curious to know, how did you stumble into VC?
Sure. So I think, as I mentioned to you in the past, I did in fact stumble into VC. So probably like most people, you're aware of investors when you're younger, maybe before B school in your early career, but I didn't really know exactly who they were. In VCs, it's a niche in and of itself, but I kind of got familiar with the concept and I think more importantly, familiar with the type of work and who was doing what during my second year at ESA. So I met some people in first year who had worked in the industry, who kind of contributed in class in some way and kind of got a sense of their day-to-day. But second year, I took a few electives that were related to VC, so INFI, so entrepreneurial finance, VCIC, which is a VC competition, and really got a taste for what it is, right? In a theoretical way, of course. But yeah, I got kind of my first exposure there. I met a few people, started having some initial conversations about it. And as you mentioned, I think I took kind of a first half step towards VC with my role right out of ESA, which was a kind of corporate venturing, digital health partnerships role at Novo Nordisk. So, working in a large company, but kind of in a more entrepreneurial way and working with entrepreneurs, kind of bridging the gap between those two stakeholders. And then, as you mentioned, I found this opportunity with Nina Capital about 2 years after graduating, a year and a half after graduating. So I've been here for the last year or so.
That's fantastic. And it is, I think, a rare one in terms of being able to stumble on VC because you probably more than most people would know it's quite a competitive landscape, even though it's open to people from all different sort of backgrounds. And like you mentioned, like you didn't really know what this, mystic world of VC and investing was about. And now after, let's say, almost more than a year in that space, are you more confident to say you understand what venture capital investing is about?
Yes. Yes, I think credit to kind of ESA for maybe setting some of the base, and also credit to the team here at Nina Capital for we run in a very transparent, kind of almost peer-to-peer flat organization, and I think that's been able to accelerate some of my learnings beyond some of my day-to-day duties. That's more deal flow related. But yes, I think I know the industry. I think I can give you the bottoms up and tops down take on it. There is the caveat that some of my knowledge on the industry perspective is in a niche. It's in healthcare, health tech specifically. But I think there's a lot of learnings from VC that apply, horizontally across different domains. So yes, happy to give some thoughts.
That's totally fine, Kyle. If it gets too boring, I'm sure our listeners will just log off.
Turn it off.
Yeah. Hopefully that doesn't affect our ad revenue. But I'd love to learn more about Nina Capital. What is Nina up to? Who is she? What's the scoop on her?
Sure. So Nina is a early stage health tech specialist fund. We're based in Barcelona. We invest almost equally, 60-40, between Europe and the US. And really, we're interested in the intersection of healthcare and technology. Now, both those words are kind of very broad definitions. By technology, we really mean innovation, startups, founders, solutions that are leveraging data, leveraging software, leveraging algorithms, computation, all the good stuff, all the bytes, the bits, and bringing that into a healthcare setting in a way that has, benefits for patients, for providers, for pharma, for insurance payers, et cetera. So that is kind of our founding thesis. And the idea here is that there's a lot of great innovation in healthcare generally. But now is a really interesting time given the kind of advent of AI, ML, kind of big data assets that we can finally start to use in healthcare in a really interesting and meaningful way, where previously a lot of stuff was pen and paper, a lot of stuff was kind of in providers' heads, physicians' heads. And I think there's a bit of a transition now in the last 10, 15, but particularly now in healthcare, that's really compelling and that our thesis is kind of built on. Maybe to take that one step deeper, when I say early stage, we're really talking about pre-seed and seed. So we're talking anything from a founder with an idea, someone with maybe an MVP, someone with kind of a first product, all the way up to a slightly more mature business that is, they have some early traction, maybe some early evidence, clinical validation, and, they have a few pilots, maybe a single or a few contracts and a really compelling, story as to where they're going. So that's kind of our guardrails. We stop any first tickets or new investments at the seed stage.
All right. So you want to get them when they still have stars in their eyes, where there's hope
Yeah,
and dreams and aspirations,
totally.
before people like you start crushing them.
Correct. Yeah, we like to pass that off to the growth stage investors. So they still view us as partners in the game rather than turning the screws.
No, I'm glad to hear that. Is there any interesting pitch deck or founder that you could talk to us about?
I'm happy to talk to you about some of our maybe recent investments,
Mhm.
and just to give you a sense of maybe where we're at in our kind of story and fund life cycle and maturity. So Newton Capital was started in 2019, so about 6 years ago at this point. And originally it was a solo founder. So Marta, she's Italian, but spent most of her career in Stanford and kind of academia. And then in the second fund, that was joined by Mark, who's from Barcelona actually, and he's a Spanish entrepreneur who worked in kind of telemedicine, telehealth, grew a business in Europe, and kind of entered the US market and then had a pretty successful exit there. The reason that's important is we just opened our third fund about 6 months ago, so in the spring of this year. And then there's a bit of a uniqueness to us, which is in this geographical, I'd say, dispersity, which
Mhm.
means most funds who are in the US, they invest in majority US companies, maybe opportunistically in Europe, vice versa. In Europe, funds from Spain or most funds from Germany, they invest in the local market, probably regionally, but maybe rarely kind of have an investment outside of their core market. I
Mhm.
think we're one of the few funds who spans both of those markets. Now, also add another layer of complexity in healthcare because healthcare is often very different business in both of those markets. The US is this huge unipolar market, but very complicated reimbursement structures, et cetera. Europe is more fragmented, per country, but has kind of a similar payer system. So a lot of complexities there. And the reason I mention that and why that's important to kind of us is one, we can kind of facilitate some of that knowledge across both markets, but it also means we have to be thinking kind of ahead when we're investing in companies on, hey, is this a market opportunity just for Europe, just for Germany, just for the UK, or can this be bigger? Do we see a vision there, and how can we kind of help that? So I'll say one company that's been doing this very well, and that we invested in recently. It's called DataJoint, and it's a bit of a tricky one to maybe verbally explain, but I'll do my best. They are a company that is effectively working at the interface layer of academia, research, and kind of within pharma. And what that means is, if you're a researcher and you're going to the lab to discover something, often you have to work with many, many different systems in the lab. You maybe have a manual notebook, you maybe have kind of an electronic notebook that you're recording your notes and your experimentation on. You might have 5 or 6 different machines that is, you have kind of input and output from. If you're assessing, molecules, or you're assessing behavioral dynamics of mice or something, you can kind of get imaginative to what those are. And then on top of that, you might have, a couple different Excel models that is trying to kind of take some of that data, combine it with the, output that you grabbed from your notebook, and then put that all together, do some calculations. So to date, this has been a very manual process. And basically all of that institutional knowledge and experimental knowledge lives with the individuals who did that. So why is this a problem? It's that often experiments are hard to reproduce. That's kind of bad for science. They're hard to reproduce, and that's also bad for the institutions who are trying to, create, knowledge. And then on top of that, things take a long time to replicate. So this company that we've invested in is called DataJoint, and they are a solution that allows all of that data to basically talk to each other in a way that's standardizable, that is kind of normalized, and that really allows you to replicate things, leaves an audit trail, kind of versioning control, all of these things. And it's built on a really kind of novel technology that had been in development for 8 or 10 years. Originally, it was kind of academic use only. Now they're moving more towards pharma. And the reason I mention it as kind of an interesting opportunity and reflective maybe of our thesis is they are a US company, but they have contracts and they're working directly with almost 100 labs already. Remember, this is early stage. This is kind of a seed stage. Normally we see companies that are just getting their product out the door. So this is a much more mature product. And they kind of span this by market footprint. So they're based out of the US. They have a lot of, traction and progress there. They're also working with some of the leading universities in Europe, and we're really excited to be a partner with them because they kind of saw our thesis and our vision, and we're working quite well together to kind of recognize that dual growth. So, anyways, yeah, that's one that I'm pretty excited about, and we like quite a bit.
That does sound exciting. So it's almost in a way like bringing digital twin technology into the world of research to
Yeah,
sort of minimize the iterations required for testing and speed up the process for trials.
yeah, yeah.
Great. Thanks for sharing that one, Kyle. I was curious then to dive a little bit more, given that you all have a focus both in Europe and in the US. What are some stark differences do you see from founders that are pitching from both sides of the ocean?
It's a great question. I'll caveat here with, of course, there's exceptions to everything, and these are generalizable. Typically, we found that US founders are a bit more vision oriented in the sense of, they might
Is
only
that a
have an
nice way to say
MVP.
arrogant?
Yes. Look it up in the dictionary. They come to us with an MVP, but they have a vision for what that's going to look like in 2030 and how they're going to get there, and the kind of the roadmap to do it. Now, often that is aspirational, and we have to be a little bit more cautious about kind of, what are the steps in between. But we appreciate and encourage this type of, kind of big thinking, right? And obviously this is often a prerequisite for any type of VC investment, is it needs to have a big enough market. The other thing with the US, and I think a lot of US founders don't appreciate how easy it is to have a single large market available to them, all in the same language, all operating on the same set of kind of rules. It's a huge advantage. And often you need a lot of money to maybe be competitive in that advantage. Especially now we're seeing round sizes, especially in the US, go up and up and up. In Europe, we tend to have founders who come from really great universities, who are great technical skills, who, have kind of cut their teeth on some really great deep tech innovation. And, I think they often are appreciative of the difficulties and complexities of the European, state, and kind of the difficulty of scaling and going outside the country. So they can often be a little bit more cautious in a way, which sometimes is great in the sense that, you have someone who really understands the necessities, the kind of the bottom-up complexity of entering a new market and what all that means, how long it's going to take, how much money. But sometimes it means that the vision can be a little stunted in a way. Okay, we're going to go to Spain and then France. And so is that a big enough market? So I think that's one of them. And yeah, I'll leave it there for now.
Yeah. I think when I was in Europe, something that I heard often from the investors and the startups was generally the innovation market in Europe is a little bit more cautious, right? Because Europe is built on great research, proven technologies, and because of that, investors particularly are looking for more of a sure bet rather than wanting to fund a moonshot project. But at least I started to see a little bit of a shift. You have your Revoluts coming up. You have VCs like Harry Stebbings in London, promoting the need for investors to be more risk-taking. You have now former athletes such as Nico Rosberg, the former F1 driver, getting into the space as well and also promoting it. Is that something that you're seeing as well from your end?
We are. Yeah, and I think from kind of a innovation ecosystem, which is not like a real definition of anything, but I think it's just it's a kind of representative of the mindset and of the maturity and of
Mhm.
kind of, to your point, examples, right? And examples not only in terms of what is possible, but financial returns, right? For some of these LPs who are making big bets, they also need to see that this is possible on a, kind of a multi-market, EU-wide scale, or maybe even global scale. But yes, I think we're seeing that trend. The winds are shifting. I think there's a lot more opportunities here and a lot more willingness to take risks than probably there was a decade ago. Now, I say this not having lived here a decade ago. There's some recency bias here that probably I'm attached to, but yeah, I agree with you.
Yeah, no, it's all right. We're MBAs. We can talk about the past
Yeah,
as
we can
much
kind
as
of
we
make it all
want to.
up, right?
Right. No, that's great to hear. So now health tech, obviously, it's having its moment. It's also been an industry that's not been immune to the Midas touch of being harassed by anything related to AI. What's something that's really exciting you in the space in this regards?
So we actually recently published an article, I think on our blog or on LinkedIn, which basically said we don't invest in AI, which is meant to be somewhat inflammatory because of course we invest in companies that are using AI. Of course, it's part of almost all of our portfolio companies' roadmap in some sort of way. Of course, we're investing in companies that use this kind of both foundational technologies, frontier, models, et cetera, et cetera. But we don't invest in AI for the sake of investing in AI, right? And I say that because, two reasons. One, with any hype cycle, you have to be a little bit careful about kind of, getting caught up in the froth. And two, I think with healthcare specifically, you have to be really aware, right, of if your problem doesn't work or your solution doesn't work rather. And I think that the example of this is around kind of artificial intelligence. Everyone knows hallucination, right? But you can think that any AI model that's deployed, even if there's a very, very, very low chance of probability that it does something incorrect. In healthcare, that you can't have that, right? There's kind of a zero fault default with any kind of clinical workflow. And so that has historically held back a lot of technology innovation in the sector, which rightfully so, right? You kind of have to have the patient in mind. There's a lot of ethical concerns that you need to kind of wade through. Where I think we're seeing a bit of a shifting tide here is there's a lot of really interesting stuff happening. AI scribes for healthcare settings. So at the point of care, the doctor's talking to a patient. Instead of having to handwrite all those notes or write them in an electronic medical record with your computer, there's these new kind of ambient listening technologies that can be deployed and basically do that job for you. And so, that's an area that is really, really exciting in the sense of kind of clinical output or outcomes, being able to reduce the amount of just work that doctors have to do as opposed to their kind of core duties of taking care of the patient. But it's an area that we have to be a little bit careful in terms of kind of our fund size and our ability to deploy capital into a $500 million Series D raise by a bridge or whatever it will be in the future. And so I think for us, we were really focused on finding solutions that are using artificial intelligence or using technology in really specific ways. So we kind of like the niche, sometimes the boring use cases, but using innovative approaches to kind of how to build in technology that's available now into spaces that are less well addressed.
Do you see more growth or more potential in the areas of hardware or software? Hardware, what I
Mhm.
mean is, would you allow a robot doctor to operate on a loved one, or easier to start
Sure,
on maybe a cat or a cousin that you don't really like that much?
sure,
Or do
sure.
you see more space in sort of the software where you have a health AI assistant, who keeps you up to date with your medication, your doctor's appointments, has an insight into your biomarkers and customizes your treatment? Where do you think the potential is more in the health tech side?
Sure. I think the latter. And I'll share maybe an anecdote. I was just on a board call or board meeting call yesterday with a company that's working on a solution that is activated at the point of care. So it's when a nurse is going into a kind of a home care episode, needing to record some information about the patient. We very much believe that there will always be a human touch required for a lot of things. Not because the
Mhm.
technology can't do it necessarily, but because the patient wants it, right? And there's a long tail of kind of technologies that probably you will need to deploy just because the healthcare demand is so high. But we think that most of the time, the human to human interaction is really the important part. Now, where we think that this can help technology can help more generally is in all the stuff that you don't want to do that isn't really relevant to the point of care. And so the anecdote that I was referring to just a second ago is we invested in a company recently called IO Health, and they're doing a way for nurses who are conducting home care visits to go in and basically document the visit in a much more nimble and agile way that, kind of improves both the patient outcome, also allows better kind of coding and recognition about the financial and kind of economic outcomes of those visits. And the founder actually said something really interesting, which was, we believe that the nurse-patient interaction will never go away. And that's important. The nurse needs to provide that care in a very human way, right? It's in the home, it's going to someone's house, it's kind of doing all the things you need to do there. But there's all the stuff associated with that downstream that can be improved by technology. What are those? Things like having to audit the fact that the visit occurred, actually doing the billing for the visit to the payer, to the insurer, all these kind of downstream things that are a function of the initial visit or the healthcare, kind of interaction really are just part of kind of a bureaucratic checklist or something that needs to run could run in the background without the human interaction. So we think there's a lot of opportunity there to basically kind of come in, provide value at the point of care, keep the human in the loop, but then start to automate some of those things that are less relevant to the person-to-person care.
Yeah. No, that would be, I think, a game changer. Like case in point, my girlfriend, who was supposed to book my last healthcare check for me, didn't. Could I have done it? Yes. Am I lazy? Also, yes. But we definitely need better technology on that. Amazing to hear about all those things in health tech, Kyle, and thank you so much for sharing that. I want to shift it a little bit towards you.
Sure.
What's your daily life like? What does Kyle do when he wakes up, getting ready to go to work?
Hmm. Oh, interesting. Even before work starts. I'm a big coffee person.
Right.
I'm a boring breakfast person.
What's a
But
boring breakfast?
a boring
I think that's
breakfast
a more
is
important question.
oatmeal. That's a boring breakfast.
Okay.
Every once in a
Any
while,
fruit,
you spice it up a little
berries,
bit. Yeah, oh yeah, of course, of
cinnamon?
course, of course.
Yeah. All right.
There's toppings where there's plenty of toppings. It's just the base, most people think about porridge and think Goldilocks and it's a slippery slope from there. But yeah, we got some toppings, some fruits, some nuts, cacao powder, all that good stuff. But no, typical for me, I feel very fortunate. I live in Barcelona. I live not that far from the office, so I have a nice little like walk into work in the morning where I get to see the city kind of wake up. And then we're kind of in central Barcelona, downtown. Yeah, it's a nice start to the day.
Yeah. And then when the actual work starts, what are you doing on a daily basis?
So maybe to set the context here, I joined Nina Capital as an associate. And as probably anyone watching this podcast knows, there are many different levels and definitions of what associates do within VC. I'll mention for us, because we're kind of a specialist fund, we're rather small. So there's 8 of us kind of at any given time, 4 partners, myself, a senior analyst, and then some interns who are kind of working as analysts. So my role as of today, and it shifted some in the last year, but my role as of today is probably 70% deal flow, which we can get into, and maybe 30% portfolio support. So that's kind of split. When I first joined as an associate, it was probably 80, 90%, 100% deal flow. And so it's kind of shifted over time. And as you kind of rise up the ranks, typically you kind of have less frontline deal flow responsibility, a little bit more on portfolio support, and then eventually kind of more towards LP relationships and those types of things.
Great.
So
And
yeah,
on
go
deal
ahead.
flow, yes. Talk to us a little bit more about that, both from the side of how you keep yourself up to date in order to have like sort of a critical eye when things are coming in. But at the same time, how do you keep that deal flow going in? How do you keep the funnel, consistently pouring?
So shout out to our analyst team here who does an amazing job. Maybe one other thing to add, we see about 2,000 companies every year. And those are companies that are specifically within our thesis. So we probably see more than that are, you have to say, thank you, this is not healthcare, thank you, this is not technology. But those are companies that we've actually tracked that are in our kind of CRM that are specific to our thesis and that we, are quote unquote invested. Of those 2,000, we source, which means we actually go out and find about 50 to 60% of them.
Mhm.
So maybe 20, 30% of the remainder is kind of from in-network, so from other VCs, from other partners at different firms, from kind of, networking conversations, conferences. And maybe another 20%-ish is passive inbound, so stuff that comes through our web form. So when I sit down in the morning, I am doing a mix of either managing deals that are already within our pipeline that I think are interesting and need a little bit more attention around, is this kind of interesting technology? Is this market different? Do we need to think more strongly about, this risk on competition? What does that look like? So those are deals that are already in our portfolio, or not our portfolio, in our pipeline. And then there's kind of the active sourcing portion, which to your point about kind of market updates and being current, that's where this helps. So we're not fully thesis driven in the sense that we're not trying to define a specific thesis and then find companies in that space. But we do, for example, I might want to do a deep dive on cancer diagnostics. And in that deep dive of getting up to date, of learning what the latest is, you basically find out who are the big players, who are the, kind of well-funded startups at that growth stage, and who's coming out of the woodwork, who's maybe within our range. And from that, you could do the kind of classic sales and marketing, BDR type approach. You find the founder on LinkedIn, you get their email from, a connection, you kind of try and see if they're raising, what that looks like. So it's a mix. Yeah, I'd say we try to be a little bit focused and tailored on when we're trying to go out and actively source companies and find deals and find, innovation. Try to center it around a bit of a thesis and a bit of a focus.
And what are markers that make it easier for you to say yes or no that you really look out for?
The cheap and easy answer is founders team.
Right.
And I think everyone says that, especially at early stage. This is not, it's not new news. But I think for us, we're maybe a little bit more comfortable with founders who don't have that much founding experience, but who are really closely tied to the problem. And an example of this is, we invested in a company called CryoCloud, and they are doing some really interesting work with cryo-EM, which is basically a type of kind of microscopy that you use to characterize biological structures, so like proteins, cryogenically, actually. And the founder Robert knows his space inside outside, comes from that world, but has never founded a company before. I know a lot of sometimes Silicon Valley VCs. It's okay, two ex-founders, 3 exits, worked with Sequoia. That's all great, but we actually place a lot more emphasis on people who know their space and can kind of describe the problem themselves, can do the sales, know the customer needs, have this need-driven approach towards problem solving. So maybe, not every VC thinks like this, but that's kind of our thesis. Apart from that, I think for us, another big thing that to me like sticks out when I'm looking at a pitch deck and, you see hundreds of pitch decks a month, really, really clear definition of problem. And almost as a proxy, if you see in a really good market size, and what I mean by that is a really clear, segmented, bottom-up approach to what the market is and why the sector and why the technology is specific to those stakeholders. And that to me shows this like level of thinking that I think is really differential in terms of being able to say, there's something here. They've thought about this problem a lot. Maybe I need to think about this problem.
Yeah. I guess it does make it easier when the problem resonates or is clear cut, and that gives you conviction that this person actually wants to create a solution to solve a problem rather than create a solution for the sake of having a solution.
Yeah. And actually, I didn't mention at the very beginning because I didn't want to get too caught up in the weeds, but Nina Capital is actually founded on a methodology called biodesign, which is a methodology out of Stanford University. And it's effectively a way and specific to healthcare and health technology, but it's basically a methodology to be able to find a problem and then build the technology around it rather than vice versa. So how do you identify actually what a need is? Who is the patient population? Who is the stakeholder? And because healthcare is so complex, often we find companies that come to us, they have an amazing technology, but they really haven't thought about the incentive systems and the structures in place because healthcare is just fragmented, it's hard, it's complex. And so therefore, they basically built a solution that it's nice, but it probably won't work. And so this biodesign methodology, actually Marta, who's one of our partners here, taught it for 10 years at Stanford. So she's like well-versed in this and kind of brought this thinking to the firm. And it's part of the way we actually assess deals and it's part of our process. But it really helps us think about that need first rather than, is this cool technology?
Great. That's really cool to know. Hopefully, if our podcast gets big, we start to see more people start to steal this idea.
Yeah. Maybe I shouldn't have said anything.
Exactly. But invest in companies that are solving problems. And obviously in health, there are a lot of really sort of strong problems that need to be solved. So it's quite cool that you're in this space. Last question on you, Kyle.
Sure.
How have you changed since you started working in VC?
Ooh, that's a great question. I think that I ask better questions.
Right.
I think, for a long time when I was just starting here, there are a million questions you can ask of any company. And I think the skill set in VC is figuring out which question and when is really the hard part, right? Because
Yeah.
what's cool about this job, and I think what I've really enjoyed about it is you get to see so many different technologies, so many different business models, so many different, in our case, markets that these are operating in. And like I'm an engineer originally, and so I had this bias towards wanting to really dig in, like
Mm.
understand the tech, understand why, how does this work? Like what is the algorithm you're using? What are the weights? And like, you know, you have to kind of believe in the basics and kind of okay, let's assume the technology works. The real problem that we need to sort for this specific company with this specific founder might actually be the business model, right? Like we probably need to know that in the first conversation rather than the third conversation when you've wasted everyone else's time on the due diligence because you know everything about the tech, but the business model falls apart when you actually kind of start to circulate this and start to really dig in deeper. So that's part of it. And I think, it's hard to put on paper exactly what that means, but it's something that I've noticed from the best, not just here on my team, but kind of the best VCs that I know is they ask really compelling questions that challenge some of the fundamental assumptions at the right
Great. Glad to hear B School has corrupted another engineer.
time. One
Um,
more.
yeah,
Yeah.
fantastic. Now let's move to our next corner, which I like to call Ad VC, which is
Mm,
about advice from a VC,
see.
right? So, what would you tell a young budding venture capital analyst on what they should focus on to do better in their job?
To do better in their job. I think there's a huge opportunity for VC right now so human to human interaction, right? As we stated earlier,
Mm.
doctor to patient, important. I think that will always be true for VC in terms of network, in terms of kind of again trusting, other investors, trusting founders. So there's a human element that I think is irreplaceable here. However, I think there's huge opportunities to optimize and automate a lot of the front end of deal flow, and
Mhm.
even to a degree of analysis. I think you have to be really careful here. But what I mean by that is we get tons of inbound all the time from companies that um, they don't know who we are, or they send they think either we're investing in green energy or we're investing in something else, and often we reach out to founders because we think they're at a certain stage because there's no public information about where they're at, and I think there's this kind of connection problem that like could be very easily solved by technology. And I've seen some good analysts and associates who are working on, whether it's LinkedIn scraping for finding stealth founders, whether it's kind of deal prioritization for like deal signals in different public domains to basically waste less time on deals that are not relevant to you. And so I think it's a really, I start to feel old at this point because like I'm no longer, I don't code or code well at least. But I think there's some great opportunities here. There's a podcast or a blog called Data Driven VC that I kind of keep tabs on, and they're doing some good work in this space. And yeah, I think again, you have to be a little careful on how much of this stuff you automate, but I think there's some opportunity there to basically connect the right founders to the right VCs at the right moment.
And then continuing with this corner, what would you give as advice to a startup who wants to pitch to you?
I think that relationships with VCs is not just the pitch. We've actually had many amazing founders come to us, pitch us. It's not the right time. It's not the right investment. They're a little bit early, et cetera. We try to be very transparent and clear with the feedback that we give so that really, we're clear on our thinking, but we also give founders like a real chance to work on the thing that we think they need to work on. Now, they're free to ignore our advice. But why I think this is important is because we've invested in many companies who have come back to us for the second or the third time, and they've done what they said they were going to do. And they prove that, okay, actually, we were concerned about market size. It's not a market size. Here's the validation to prove that, right? And so I think sometimes as a founder, you might, obviously, if you talk to 100 VCs, 98 of them say no. Of course, you're going to get frustrated at the 98th one. And so sometimes there can be this like tension of bad blood between maybe a negative response, right? But I think the best founders I've seen have been ones who have been able to say, thanks for that feedback, really interesting. Let me take this on board and do something with it. Come back to us in 9 months and have basically blown us away with that traction or KOL feedback or something that's really useful and we can kind of sink our teeth into and then restart that conversation from there.
All right. So I think building a relationship, even if the pitch doesn't go your way, because you never know in also venture and I think even startup world is quite small.
It's
Yeah.
a long game.
Awesome. So that brings our at VC Corner to an end. And the last one, my marketing team is forcing me to do this stupid TikTok trend, blind ranking 5 VC stereotypes. Are you ready, Kyle?
I hope so.
All right. So you know the concept. I'm going to mention 5 random things in any order, but you just have to rank them from 1 to 5. 1 being the most cringe.
Most cringe.
1 is the most cringe, 5 is the least cringe. Are you ready?
Ready.
All right. First one, Patagonia vests.
Patagonia vests, I think, are a 4.
Okay. So you think they're not that bad?
They've become so cliche that now they're back to being normal.
All right. How many do you own, Kyle?
None, actually.
Okay. All right. Okay.
Which maybe I should bump it up to a 3 since I don't have any. No, I'll keep it at 4.
You keep it at 4. All right. Talking about founder resilience on LinkedIn.
3, because maybe there's a nugget there, but yeah, 3. It's not great.
All right. You might like this one. I fell into VC by mistake.
I'm at 2. I'm at 2. It's kind of true in my case.
Okay, so we only have 1 and 5 left.
1 and
right?
5.
So you gotta be careful. All right. Let's circle back next quarter.
1. For sure.
How many times have you used that
I
one?
also say it. So like
Yeah.
I don't know, maybe I need a word editor or something to help me out.
All
Okay,
right.
which means 5 is what?
5 is the 48-hour confiscation in Berlin or some exotic place.
Oh, that's awesome. Yeah, everyone should do more of that if they can.
Great. So you're happy with your list?
Yeah, I think so. I think the only change I'd make is maybe 2 and 3 get flip-flopped, but I would be okay with where they are.
Awesome. Great. Kyle, thank you so much for sharing your insights and spending this time with us and bearing through my asinine questions. We really appreciate you having on the fun side and hope you had a little bit of fun.
Pleasure. I did indeed. See you guys next time.
Thank you.
Bye.